You're listening to the Staging Sips podcast with Lori Fisher. This podcast is dedicated to helping real estate staging CEOs build healthy businesses that grow, flow, and thrive. Hello, everybody. Welcome back to the podcast. And today we've got a special episode. We are with Melissa San Román, who is a bookkeeper and QuickBooks expert. And she is amazing, y'all. She's really incredible. And for me, bookkeeping is probably one of my non-areas of strength. It's a huge area that I have discomfort with. But Melissa does a great job of just breaking things down and making it so simple for you to know what you need to be doing and what you need to be planning for. And at the time of this, you listening to this, we're a little bit ahead of when you should start thinking about your taxes, but this will help you prepare so that when you're starting to look at your year end and what you're going to do in quarters 3 and 4, her advice is going to come in really, really handy. So I know we're a little bit ahead of that, but I think this is going to be extraordinarily valuable for you. So listen in to all of Melissa's fantastic advice. Well, hey, Melissa, thank you so much for joining us today. I cannot wait for you to share your information with our audience.
Yeah, thank you for having me. I am so delighted to be here and definitely ready to help out wherever I can.
All right, awesome. So let's just dive in. So,
okay.
I'd love to hear, you have a really interesting path towards helping people with bookkeeping. Like, you have seen both sides of the equation from being a business owner to bookkeeping. And so I'm really curious about that journey.
Yeah. So my journey actually did not start out starting as a bookkeeper. So how my journey actually began was as an entrepreneur myself. So I began growing a business. It was an S Corp, and that business grew to about $8 million and was sold in 2020. When that business was sold, I did take a little bit of a break, but as an entrepreneur at heart, I definitely knew I was going to dive back into business at some point. And I did. I ended up starting another business, and that began in 2018. It was sold in 2021, and that business was sold to a public company. And my journey really, obviously, when you're building a business, you're focused on a lot of different things. You're wearing a lot of different hats. But one of the things that people always ask me is, well, how did you grow and sell 2 different businesses to be so large? And the answer really is in my books, really diving into those numbers all the time. And I think the mistake that a lot of entrepreneurs make is they look at their books as kind of a tax time burden, right? So, I've got to get my books done. I've got to file my taxes. And really, your books have so much more data than that. Your books are the key to teaching you how to grow, where to cut. And my goal really, I wasn't really sure what I was going to do once I sold the second business. And I realized I really want to help other entrepreneurs see those numbers and understand that process so they can get there too.
I love it. Okay. So 1,000 questions coming out of that.
Okay.
So let's just start then. When you dive into your books to look at how to grow, where to cut, what you said, where do you go? What do you look at?
So the very first thing is keeping your books accurate and timely. So I think a lot of owners go into QuickBooks and they kind of forget about it, or maybe they don't really even want to deal with it. So they're going in really late. So maybe they're going in June and they're looking at data for Q1. Well, the ship has sailed. It's too late to go back and make decisions about your business when you're not being timely. So my first advice to anyone I work with is, if you are managing your own books, you need to make sure that your books are current and that they are accurate. And by accurate, I mean, if you're putting your own personal money into the business and that needs to be recorded, or your business is perhaps purchasing a vehicle or equipment, or in the case of your audience, they're purchasing a lot of different furniture, and that needs to be recorded correctly. So if they cannot do it, hiring either a bookkeeper or maybe their CPA firm, but making sure that their books are current and accurate is the very first step in looking at your numbers.
Awesome. So, and that brings up for me too, when hiring a bookkeeper. So say somebody has made that decision that they're hiring a bookkeeper, what is the expectation? Should you be able to look in on a daily, weekly, or monthly basis for that accurate and timely bookkeeping? To know, like, some of us don't know, so we think, oh, a quarter's gone by, I'm finally just getting my numbers, and that is appropriate and acceptable. I think it helps us guide hiring and letting go of someone decision making, right?
Yeah, I think the most important thing is just realizing, like, do not let your bookkeeper be lazy. So you should be able to go in at any point in time, and your books are fairly current. So within a few days. When I take on any kind of a client, we, at the end of every quarter, and I've already done this for the majority of the clients that I work with, we meet over Zoom. We go through the quarter, we look at it compared to the previous quarter. We look at what went well and what did not go well so we can plan for Q2. Now, some businesses have seasonality, so we already know that their Q2 is going to be better or worse, but we're trying to look at those numbers and make decisions. Now, a bookkeeper should give you a month-end report at the end of every single month that shows where your business is in terms of its profitability for that month. Then again, like a meeting at every quarter. And then close to like October, you really want to be kind of getting really close to your bookkeeper and your CPA and making decisions so that you can make good tax moves. Because most of the things that happen with taxes, once that clock strikes midnight on December 31st, there's no way to change what your tax liability is. So I would say it's really important to make sure that your bookkeeper is keeping your books up to date within a few days and meeting with you so you can understand those numbers.
Love that. Okay. So everybody listening, if your books are not up to date within 2 to 3 days, time to call Melissa. And so when you have those timely and accurate records in place and you're looking at those and you're able to look at those on a monthly, quarterly basis, what kinds of decisions can you make from those? Like you said, like where to grow, like what are you looking at it by service mix? We have, multiple service lines within a staging business, like vacant staging, occupied staging, and like consultation business. What do you look at to see where you should be spending more of your marketing time, I guess, essentially?
Yeah, I'm looking at each revenue line. So I'm looking at every single revenue line that's in that business and where that business is excelling. And then we kind of ask the owner, like, well, how much time are you spending on this one specific area of your business? It's not generating profit. If it's a lot of time, maybe it's time to cut that line. We also like to really take a look at the profitability. So here's an example for my own business that I like to share. We were selling a mix of different types of education. So one of the things that we were selling is training to corporations. And this training would be over $20,000. So obviously that's a big, sexy number. So everyone would be really excited when we're making this $20,000 sale. But we were selling these little like $37 books in the background. And when we actually dove into the numbers for the quarter, we realized this little $37 book was killing it. I mean, it had no cost behind it. It was really by leaps and bounds, making more money than this big, sexy number everyone was looking at. So we ended up making more books. So just an idea of really, it's hard to know if you're not diving into the numbers exactly what you're looking at. And then as a second thing, we are looking at expenses. So we're looking at your expenses for your business. Where could you potentially cut expenses? A lot of times owners go into their expenses and they're like, I'm spending $2,000 a month on food, or, I'm spending $3,000 a month on software platforms. I did not know that.
Right.
So just really understanding where their money is going, and then additionally looking at those different revenue streams and making decisions around where to press and where to cut back.
Yeah. And that's really interesting because we've done that in our business as well when it comes to like vacant staging versus our consultation business. And we'll look at it not only, like you said, from the perspective of revenue, because vacant staging, the revenue is super sexy. And when you really break it down, the profitability is lower than our consultation-based business. So, we may have to book a few more consultations from a revenue standpoint to make it seem as sexy as the vacant, but when you look at the profitability, we're keeping more of it. So we made the decision to fire up the marketing around that because, to your point, it just made so much more. It was like so much easier to deliver too.
Yeah, or that on the vacant property line, you need to up that pricing. Like the books just help you make decisions. And I have never worked with any owner where once we dive into their books, it was exactly as they expected. Once you're looking at those numbers, it's really clear that you need to make changes. So having those current, accurate books so that you can make those decisions before it's too late. And that's what often happens. People are waiting until it's way too late and the time has passed for those changes to be made.
Yeah. And I guess the other thing is that I'm curious about, because there's one thing about the numbers telling you something. Like, for example, you mentioned raising the price on vacant staging services, and this comes up for a lot of business owners. Then there's the mindset work around that.
Yeah.
Do you deal with that ever with your clients?
Yeah, absolutely. And one of the things that, just because I own businesses that we like to talk about is like, what are other revenue streams even? Like, now we're here and we're seeing that this one product has, really good growth. Where could we grow? So I'll give an example. I talked to a lady who does, she's an esthetician and she does facials in person. And we started to talk about, could you do consults for skincare? So one-on-one consults. So just kind of brainstorming, like, what is it within your niche where you could be growing this business exponentially? Mm-hmm. We do talk about that. That's not something that I think all bookkeepers talk about. And I just talk about it because I enjoy it. But as a business owner, it lets you think about other ways that you could potentially be generating revenue.
Yeah. Yeah. That's amazing. So for my people out there who are still doing their own books and are not caught up on their books, any recommendations? I mean, especially right now at the time of this recording, we're a couple of weeks out from April 15th or whatever, 17th tax filing. Is there anything that they should be thinking about in terms of getting caught up for even 2023 taxes, or do we just not worry about it and do better for 2024?
For 2023, a lot of people are not caught up. So I think that's another misconception that business owners have. A lot of times when people meet with me, they're like, I guess almost embarrassed, where they're like, my books are a mess and I should have been keeping up on them and I didn't. That happens. Like, we're all trying to run businesses. We're trying to make it work. We're trying to generate revenue. We're trying to do marketing. And the books are really easy to kind of fall by the wayside. So for most business owners, they are behind. And that's really common. So there's no shame in that. So for anyone who is not caught up for 2023, we call that backlog bookkeeping. We go in for the year and just clean everything up, reconcile all of the books, make sure everything is prepared for filing. Now, you're likely, because it's the third right now, going to want to be filing an extension if you've not done so already and you don't have your books prepared. But the only thing we can ever do is do better, and doing better means learning from those mistakes and then getting things going correctly now going forward.
Exactly. Yeah. I love that. And in terms of even thinking about, so you had mentioned it, again, kind of around that tax topic, come October, looking at the books and seeing where you can find tax advantage situations. And you talk a lot about that, even in terms of what's your business structure and how are you an S Corp or an LLC or things like that. What can people be thinking about for, 2024 filing that they should be looking at inside their books or keeping track of more closely, or even considering, do they change the structure of their business? I don't know if that makes sense.
I think there's a lot of sexy things that are out there on Instagram, and we talk about them on Instagram, and we have people come on my Instagram and talk about them. And those sexy things are like hiding your kids, purchasing a vehicle like a G-Wagon or something like that. But really, I think the most practical thing that people can do is, it is just you in your business. You can open a solo 401k and you will need to talk to whoever you work with. If it's Charles Schwab or Fidelity or T. Rowe Price, I am not an expert in that. but I've seen people be able to contribute as much as $60,000 in that solo 401k, and it is a deduction to their business. So again, not incredibly sexy to be putting money away, but as entrepreneurs, we're oftentimes not really saving enough for our future. So that's a great way to reduce your tax liability and be able to save for your future. So I would say come October, if you know your business is profitable, your very first move is to talk to somebody about some kind of 401k option, whether it's a 401k, a solo 401k or a SEP, something that allows you to put money away. Following that, we always look at the profitability of a business. So if a business is typically between $40,000 to $60,000 in profit in the business, that's when you want to start looking at electing as an S Corp. So I think a big misconception around S Corps is it's a different, like you have to do something different than your LLC. And while you do, it's not changing your LLC. An S Corp is actually a tax election for an LLC or a C Corp. So an S Corp is not a corporation in itself. You do not just become an S Corp. You become an LLC or a C Corp and elect with the IRS to file as an S Corp. So I think people kind of don't really understand that. So any LLC can elect to file as an S Corp. There is a filing window which has lapsed. It was March 15th, but the IRS does oftentimes allow for late elections. And why you might want to be thinking about this is once you become an S Corp, you have the ability to take your district, you have the ability to do two different things. Number one, you're required to run payroll. So that can be a burden on some businesses. So it's something to think about, but you will be running payroll and that payroll is now an expense to your business. So before when you were taking your money or taking your owner's draws, that's not an expense to your business. Your payroll taxes, your payroll fees, those are all now an expense to your business. And the distributions that you get to take, those are actually not subject to that 15.3% self-employment tax.
Oh.
So if you've ever gone to see your CPA and you've paid that self-employment tax, you know the pain. So typically we say around 40 to 60,000 because the administrative cost of running an S Corp, like running payroll, you're going to be filing a separate tax return, an 1120S. It's not going to flow down onto your personal taxes in the same way anymore. You will be required to make you will be required to file a corporate return. That's really around the time where it starts to make sense at that 40 to 60K mark.
Mm-hmm. Yep. Awesome. And just as I guess it's not even an aside to that, but there's this new, the BOI filing that has to be done. So explain that, because I've watched so many of your videos on it, and obviously we've gone through the process with FinCEN, but can you explain it to everybody what it is and why they need to do it and when?
Yes, absolutely. So the BOI actually has been around for a long time, which is the Beneficial Ownership Information Report. So anytime you were opening a business bank account, so maybe you were going into Wells Fargo or Chase and you're opening a business bank account, they were actually filing the BOI with FinCEN on your behalf. That's why you're going in with your info. So a lot of bankers were messaging me like, the BOI is not new. And it is not new. But what is new is through the Corporate Transparency Act that passed, the BOI is now being required for all business owners, and there's 23 exceptions, which I'll cover here, for all business owners to file. And this needs to be done depending on your business. If your business was started before January 1st, 2024, you have 1 year to file. So you have this entire year to get filed. That would be due by January 1st, 2025. If your business was started in 2024, you have 90 days from the day your business was registered to file. So kind of different rules. People always say, well, when do I need to file by? Depends when you started your business. Now, the fines for not filing are so steep. I don't think even the IRS has fines this steep, but they're up to $500 a day for a maximum of $10,000. So they are really pushing on business owners to file the BOI. I will say I have a video on my Instagram of me filing my own BOI. It's really simple. It's really basic. I think think it's another unnecessary hoop to put small business owners through, if I'm being candid, but you only have to file it one time unless you have a change in ownership. So my feeling kind of is just get it done, get it out of the way. It's frustrating that we have to do this, but
Yes.
it is a requirement.
Well, your video that's one of your pinned videos, isn't it?
Yes.
Yes. That was so helpful just to see, because as soon as you had posted about the possibility of it, I was like, oh my God, because it took me so long to just get approved by the state, 15 years ago when I started my business. I was like, I'm never going to get this done right. And it was super easy having you walk through. So yeah, in your Instagram, we'll put it in the show notes, but you are, tell me your Instagram, profile name so people can go there.
Yeah, it's melissa.san.roman, which is ROMAN. Yeah. And there is a video there, again, where I kind of walk through that BOI filing. Now, there are exemptions. I think this is where people get really heated, because my video did go viral, but it mostly went viral because people were so angry about having to do this filing. I did not know it was going to evoke so many emotions in people, but there are exemptions, and I think this is where people get upset. The exemptions are typically for bigger businesses. So if you're over $5 million, if you're a public company, if you're an insurance company, banking companies, I have a list of the exemptions on my Instagram that you can go download. But the reason why those companies are exempt is they already have to report.
Mm-hmm.
So it's not like they're getting this, they're getting a free pass. They already have a lot of requirements.
Yeah.
So the FinCEN doesn't need their info. They really just need ours, which they could have really linked up with the IRS and done this on their own. But again, it is what it is.
Yeah. So for anybody who's listening, just want to be clear that the website that they would go to, again, they can go to your Instagram, but the website that they would go to file their BOI is?
It is fincen.gov, which is FINCEN.gov.
Okay.
And as soon as you land on FinCEN, it's like, file your BOI reporting. You're not going to miss it once you land on FinCEN. And that was another, crazy thing about going viral on Instagram is people were messaging me like, you're a scam, you're trying to scam people. I'm like, I don't own a government website. I don't care if you go file or not.
Right.
It's a requirement. So FinCEN.gov, they have a ton of great info on there too. They've got tons of FAQ nows, videos, it's a really good resource.
Okay, awesome. Thank you. So for my business owners who are out there who have not filed yet, depending on when you started your business, take note, because those fees sound horrendous. So, one of the things that we haven't really touched on is, what mistakes do you see most businesses make with their finances?
I think the number one mistake I see business owners not make with their finances is just not really understanding where their finances are at. And an example, and again, there's no shame in this. If you don't know what your 2023 numbers are, it's really hard to make decisions going forward in 2024. And you might owe a lot to the IRS, and you left money on the table by not taking advantage of things that are available to you within the scope of the law as business owners. You have so many things available to you. And to see a business owner owe 20, 30 grand because they just didn't plan properly, to me, that's just such a shame, because it just takes understanding where your numbers are and then making decisions accordingly so that you can put that money to use for you, your future, your family, and not be paying it out.
Mm-hmm, exactly. And I know we touched on a little bit, with the SEP IRA and things like that. Are there other things that, I know obviously we're talking to staging business owners, so it would be broad things, but are there other tax advantages that you see people missing an opportunity to, or they don't, when you work with clients, they don't know that they have certain things available to them for deductions? Like you had mentioned one thing about paying your children or something like that.
Yeah, paying your kids is a big one. So if your kids are of an age where they can do age-appropriate work, and again, this has to be real work. So some people are like, oh, I want to pay my kid. Well, you have to have a real job for them with real responsibilities. And you have to be tracking that pay. So it's not just something where you're like zelling your kid money and saying that you paid your kid. It also has to be under a certain amount where your child does not have to file. And I forget what it is for this year. I think it's just under 14,000. I'd have to grab that exact number, or you can look that up online or connect with your CPA on that. But you can pay your child money, and that is an expense to your business. So if you have 2 children and your business is profitable 20 grand and you want to pay each of your kids out $10,000, now your business no longer has that profit and is no longer subject to tax. And that money was now transferred to your children. Maybe you want to allow them to use it for whatever things. And I have 3 kids myself. So I do have my kids on payroll and they do age appropriate work. I have a 16-year-old. She helps me with social media. That's age appropriate. My daughter, who is 13, she's more helping me with things like filing, organization. So making sure that it's age appropriate work. Paying kids is a big one. Another one is purchasing a vehicle. I know that we talked about that. And if you've already maxed out your 401k, you've taken advantage of potentially paying your kids if you have them. Purchasing a vehicle is another good one. Now, a lot of the reason that people like to purchase vehicles is bonus depreciation. Now, what bonus depreciation is depreciation typically is over any kind of an asset over a period of time. But bonus depreciation allows you to take the entire depreciation in the year that you purchased and set that asset into use. And it used to be 100%. Right now, this year in 2024, it's 60%. It's actually potentially being passed right now to bring that back to 100%, which potentially because it's an election year, potentially to just kind of stir the economy. But you do get to take bonus depreciation, whether it's 60% for 2024 or 100%, we'll know probably within the next few weeks. But that is another way that you can reduce your tax liability.
So again, for the staging business owners that are listening, a lot of people talk about maybe purchasing their own like transport vehicles for inventory, things like that. Those are all things that can help you with your tax burden, for the year if you need to do that. But like to your point, you need to know what your books are too. And it's funny because we talk about wanting to be profitable in business, but actually you want to be profitable, but then figure out a way to not be profitable, sort of, right? Like it's kind of a funny game of like a little bit of, I get a kick out of it every year as we're meeting with our CPA and the bookkeeper about that. Like, oh no. Like, great, we're profitable. Where are we putting this?
And that another great reason to understand your books is I have people message me all the time that are really wanting these strategies. They're like, what are the strategies I can implement? And we dive into their books and they've made $1,000 for the year. It's like, you don't need to waste our time on looking at any of these strategies. Your time right now needs to be spent on either cutting expenses or growing your revenue. And not worrying about a tax strategy because paying taxes on $1,000 is so minimal.
Right.
So that comes back to understanding your numbers ahead of time. And the time to understand your numbers is not December 30th. Really in October, even into November, you want to be looking at a strategy that you can implement before year end.
Yep. It's so true. What else? What else should we be thinking about as small business owners in terms of our bookkeeping, how we invest that profit that you see people don't seem to understand or miss?
That's a really good question. I think the number one thing that business owners can do within their books is, we already talked about this, but looking at those revenue streams, really looking at their expenses, and making decisions by looking at even the like seasonality of their business that they might miss, right? Where you know that your business, and for a staging business, I'm sure you guys kind of pair along with real estate where you're really hot kind of in the late spring and in the summer. So what could you be doing with the assets that you have, the furniture that you have when it's not being utilized?
Yep.
So kind of just thinking about the seasonality of your business, looking at the more you track your books, the more data you have month over month, year over year, quarter over quarter. And you can start to see, and we did this in our first business, like we knew our Q1 was always going to be slow. We knew it would be slow. So then you can plan for that from a cash flow perspective where you're saying, I know Q1 is going to be slow. So I know that I can't just go purchase a vehicle or go buy XYZ in Q1. But in Q2, I know we're always really strong. So again, just keeping those books current lets you look back at the past and spot trends that could really help your business.
Yep. Yeah. And like you said, we are very seasonal in our businesses in a lot of places around the country and the world, as well as kind of subject to market fluctuations, which it comes into, to your point, not only, when you're investing or purchasing or anything like that, but all, making big furniture purchases, for example, is a really good one if you're updating inventory, but also even setting your pricing, because if you've got or even in your service mix, to your point, like in our staging business school, we have business owners that we start having them market in Q2 for holiday decorating for end of year, so that people are already primed come holiday season, because they're slower in the real estate market at that time of year, or upping their paint consultations, things that aren't reliant upon the market. But then also, what are we doing in terms of a pricing strategy for our staging services that, may not be busy 12 months out of the year, but maybe 9 months out of the year. But again, it's, to your point, it's like looking at the what's actually happening in your business to make those decisions. Yeah, no, that's great. You have so many great resources. I'd love for you to share, and we'll put the links to these things in the show notes, but where can people get resources from you or learn from you or hire you?
I have all of those things you can do on my Instagram. I also have a website, which is melissasanramon.com. You can reach out to me there. I'm very responsive via email, via Instagram, text messaging. I let all my clients text me. So I always joke that I have more pictures of QuickBooks on my phone than anyone should have. But I think one more thing that just kind of came to mind that I do think could be helpful, but doesn't really have so much to do with the books, but maybe about the business. And this is a way that I structured for both of my businesses, my business bank accounts.
Oh,
so you're going to see a lot about where people say you need an operating account and you need a taxes account and you need a savings account. So I use a methodology, and I do talk about this, called FORT, like protect your business like a fort. And the first one that I think a lot of business owners miss, and I think this was part of the key to my growth, was future. So I would put about 5% of the money every month that I had into futures. And futures was unknown. So maybe in your business, there's some kind of big furniture liquidation and you're able to grab a bunch of stuff at a great price that you weren't expecting, or you're able to pick up a hire that you didn't plan to. Or so the future is really for things that you're not seeing right now, but you want to have the money to execute on if something great becomes available. Mm-hmm. And again, this would just be about 5% of my income. Then I would have my operating account, which is where everything came in and out of. And then the R would be for reserves. This really depends, again, on the seasonality of your business. For your business, for real estate agents, 3 to 6 months is kind of a minimum that you want to keep in there kind of for a rainy day.
Yeah.
And then the T is for taxes. So putting money away for taxes. So if you do know that you're going to have a tax liability, you're planning for that. Mm-hmm. So come April 15th, if you're a regular LLC, March 15th, if you elect as an S Corp, you're not like, oh my goodness, I did not know I was going to owe this much.
Yeah.
So just kind of using those bank accounts as a good guideline to help you grow.
I love that. And it's funny because there are so many methods around that whole thing out there. And that future and reserve has personally saved my business so many times. Yeah. And I have it swept out, like I call it automagically, because that way I'm not seeing it. It's like out of sight, out of mind. But I've absolutely had times where that was so key. So
I love that word. I'm going to steal it.
it's so great, right? Automagic. It's the best.
Automagic. I'm making that my word of 2024.
I love it. Oh my gosh. Absolutely. So good. I'm going to be watching you for it. That's so great. Thank you so much for this. I feel like it's such a meaty topic, but I'm sure we can dive into even more, but I think this is like a great starting point. And again, like I said, for everybody listening, you can get, like, I literally can sit for the longest time and just go through your tutorials on Instagram because they're so helpful, just all of that. And from the perspective of, I've had a relationship with a bookkeeper for a long time, and I feel very lucky because when you're talking, I'm like, oh yeah, I've got all of that. But it took me a long time to get to that place. So if somebody is listening who does not have that relationship, please reach out to Melissa because she's got her shiz together when it comes to this. And I think you can be a major asset to any business. So thank you. Thank you so much. Thank you for being here today.
Yes, thank you for having me. It was amazing connecting. And if anyone ever just wants to reach out with even just questions, reach out anytime. I'm always happy to help.
Awesome. We're going to put all of your information in the show notes. Maybe not your direct number so that people are texting you quite yet. But thank you so much. All right, everybody, that's your sip for the week. We will see you next week on the podcast. Thank you. Thank you so much for listening to the Staging Sips podcast. If you love what you've learned here today, please take a minute to rate and review it so more staging business owners can find us. And if you want to learn more about how to market and grow your staging business more strategically, I'd love to see you join us inside of the Rethink You Accelerate Mentorship Program. It is open enrollment. You can get more details at rethinkhomeinteriors.com/rethinkyou. Would love to see you inside.